This is our Forex blog for January 24th, 2012, and like most days we want to use the currency meter to find the strongest ones to buy and the weakest ones to sell. Some days like today are a little choppier than others, and days like this where, let's say, the dollar has some weakness earlier on and then does a counter trend for many hours, it's a lot harder to trade on days like this than when all time frames line up in one direction and just keep going that way all day. The real-time strength or weakness of the dollar was weak until about 3, and the daily trend was down, the weekly trend was down, the monthly trend was down. When you see incredible strength like this followed by less weakness, incredible strength, less weakness, that's a sign that the trend's likely to continue, even though the weekly, monthly trend's down. The yen, on the other hand, showed mostly weakness, and the daily and weekly trend were down. So between the dollar and the yen versus other currencies that were strong like the euro, the Swiss, the pound later today, you'd want to trade those against the yen. So let's start with the euro-yen. This currency is underneath the hourly starting off. It's coming up to a Fibonacci area in the previous week's high, major resistance area. And anytime it hits resistance and doesn't fall and make a lower low than the previous swing low, you really got to buy this breakout right here. And you always want to draw your fibs on the last wave to get an idea of where the market's going to go to. Here's your first and second profit target. It also could stop right here at the previous day's high. Typically, when an area of resistance like this holds for, you can see last night, many hours, when it breaks through, it's going to go more than just 10 or 15 pips. But if this was the first time up to this area, it would very likely have some selling here too. No one's going to want to sell right on top, 10, 15 pips above a breakout of the previous week's high. Stops are getting hit. Anyone who's short is all rushing into cover by buying, and that causes this to go up. So, this is your first profit target, but it's most likely to hit this. And most of the time, it's not going to go above the 1.618, which is 70. So you got in this trade around 35. You got 35 pips profit. And I'd say less than 10 or 15% of the time do markets go above the 2.0 level. If you got out of half your trade at the 1.618 and it went up here another 14, 15 pips and kind of ran out of steam, you really want to get out of your trade here because it's very likely to come back and, if you got out with a trailing stop, you would have been out at 65 versus 82. And, those extra pips add up. So you wait for a little pullback, you get long here, it comes up in double tops, still quite strong, pulls back again, finds support at the previous day's high, not a bad place to buy, it goes up 10, 15 pips, you should move your stop to break even, and then the second trade you're in around 60, and again it goes up past the upper containment bands right to my Fibonacci profit target. This is what I, in doing my analysis each night, think the likely maximum high is going to be. And you can see it shot up about 15 pips beyond that later in the day. But this was a major resistance area for many hours. The euro was a better one to buy against the yen than the pound. But the pound's clearly showing a lot of strength here. An hour of strength by a little bit of weakness. 1 5-minute bar of weakness. Multiple hours of strength. It's not as likely to go up as many pips as the euro because the daily trend's down, the weekly trend just shifts up today, and the weekly trend of the euro is a lot stronger. So if you're looking at the pound yen, and obviously this did explode up, but after the pound became strong, the yen became weak. We have the previous day's high right here. This is not a bad breakout area. Keep in mind my Fibonacci area is right around 50, so if you bought this breakout here at 21, you only made about 20 pips there. It pulled back down, and once resistance gets broken, it tends to become support. It's another good place to get in, and when it can't break this level here, I'd get out. You always hear about double tops, double bottoms. Triple tops and triple bottoms are very good breakouts. In fact, I like to sell a double top, but if it's not able to reverse trend, you never want to sell the third time a resistance area gets hit or buy the third time a support area gets hit, because there's traders selling here and there's traders selling here, and they're getting nervous. It's not going their way, and when it breaks out, it goes back up to the high, they all rush in to cover. Traders are buying breakouts, and you also have the fib area, which is all the way up here, This is likely to be the maximum profit up at 121. That's a good 50 pips away. So you can buy this breakout risking 10 or 15 pips, and in this instance make 50 pips. It's a good place to get out. The last but not least is the Swiss. It was also strong. The Swiss is strong. The weak yen, you'd want to be buying. I'll leave this one running. You want to buy the Swiss yen, and you can see again nice breakouts right here. Nice one right here. You got a little bit of a pullback trade right here. Another deeper pullback trade. And sometimes, you know, during the pullbacks, they don't immediately go up. When they go up and pull back down and don't make a lower low, typically that trend is going to continue. The Swiss was strong today. The yen was weak. You draw your fibs on this last move, and you can see it just got up there just 10 minutes ago. But again, when you get into one of these trades, you put your stop underneath the low. When it comes up, it starts going sideways, just a few pips underneath that area. It went to 69. This is at 75. It's only 6 pips up. So when it goes sideways right there, you definitely want to exit half and get out of the second half when it goes underneath the low. But ultimately did hit that area, and now it's reversing. But today was a relatively choppy day. But if you use the currency meter, you found, you know, really the prime and premier trades. You know, the dollar was strong today. The yen was weak. The dollar has an extremely weak weekly and monthly trend. But because the yen was clearly much weaker, you could have also bought the dollar yen. And you can see a beautiful breakout earlier today, and then it went sideways for many, many hours. Nice little wedge pattern right here. Beautiful pattern. And again, your profit target on this is right here. I would have probably exited my entire trade at the 77.65 area because the majority of the time it doesn't go above that. And remember what I said earlier in today's blog video. Rarely, probably 5 or 10% of the time, do markets go above the 2.0 level. The bigger the swing, the less likely it is to break above the 2.0 level. So if you saw on this chart how strong it was and you bought this little pullback here, let's say you started trading at 8 and you want to get into this trade, you definitely want to get out of this trade at 81. You know, in that last trade you could have made 21 pips, even though it's probably a 50-50 trade at best. It's not likely whatsoever to go beyond here. So remember that the 2.0 level is likely to be the maximum profit before it has a deep pullback. Now, if it goes sideways here for a while, then you know you want to redraw your fibs on this next, you know, the wave from around 55 up to 80. Time is the only thing that resets fibs. Either you get a pullback in the last fib stays in place, or you know, 3 to 8 hour sideways rectangle pattern can also reset the fibs.